Hey, good morning, everyone. Welcome to Market Insider TV. It is Monday morning, June the 4th. Brian Hoops with Midwest Market Solutions, bringing you our Insider TV commentaries, our opening commentaries for Monday. I will not have closing commentaries again this afternoon, but we'll get back to normal schedule on Tuesday, as a lot of travel is taking place. With the travel that I've had, we've been able to see a lot of the crops from Storm Lake, Iowa to Des Moines, back to Kansas City, and back to Iowa again, and things right now looking excellent. Crops are have quick emergence, very healthy, green colors to them, and very early in the growing season, but we are off to a fantastic start, as we've been saying for 3-4 weeks now, with warm temperatures and a lot of soil moisture. We're seeing very rapid emergence and a very good-looking crop here. All right, we're going to look at some of the headlines, major things that are happening overnight. Make sure you follow us on Twitter at Midwest Markets and at our website, MidwestMarketSolutions.com. Stay up to date with all of our latest information. All right, grains weaker overnight. Lack of progress with U.S.-Chinese trade relations. The two countries did meet over the weekend, talk trade agreements. Nothing happened, and that is weighing on prices here in the overnight. In addition, the crop is off to a great start, as I mentioned. The trade's finally becoming aware of that, and we are seeing pressure. We're down 4 cents in the corn overnight. Beans about 9 cents lower, and wheat 3 to 10 cents weaker. On general lack of any buying interest by any of the grain traders. Remember, according to the Commitment Traders Report, funds are holding huge positions here. As of Friday, they're long over 392,000 contracts of corn and 150,000 contracts of soybeans. So these are some massive long positions. Technical trend is down in soybeans, and it has just broken last week in the corn. We've been mentioning that to you for several days. I think on Wednesday was the first day we closed below the trend line. 2 consecutive days would solidify that trend being broken, and we've done that. And now we're trading lower here as the funds and any real buying interest has been kept aside from the market here because of the technical considerations and weakness in prices. In addition, really a lack of threats to the crop for corn and soybeans are going to limit much in the way of any buying interest as well. Today we did have a private export sale announcement. 114,000 soybeans sold to Mexico. So that'll give us a real mild support, but we can expect to see some export business as prices weaken, and that will be pretty much a normal trade. So it's not anything that's bullish that you should be buying off of, as weather is 95% of what we want to trade right now. Now, make sure you follow favorite weather forecaster. We'll provide some weather updates as well, but right now things look pretty good for almost the entire U.S. Crops in parts of the European Union still remain dry, and that should be supportive to the wheat futures. All right, let's look at the cattle market here. Cash cattle calls this week higher, steady to higher, amid increasing slaughter and packer demand. Packers seem to want cattle. We had a steady type trade last week. They're increasing their slaughter capacity this week, and that tells us they're going to maybe be a little bit more aggressive for cattle this week. So cash calls look to be better. Demand last week, very strong. Our beef sales, they came out on Friday. They were marking near high. And that is a great sign as we can get through some of this big supply of cattle that we have coming at us. We dropped cattle weights down 2 pounds from the prior week, and that is a step in the right direction. Keep being aggressive on those marketings, keep dropping weights. We're still about 10 pounds heavier than a year ago, but we are doing the right things to work through this big supply of cattle with our strong exports, and that'll limit some of the damage that we've seen on the market. So cash should be steady to higher this week. Futures really have no reason to sell off if cash is steady because they're already heavily discounted to that cash market. All right, that's what we have for you today. Hope this helps you out. Hope you have a great day of trade. And always, if you have any questions, contact us, Brian Hoops, Midwest Market Solutions. Talk to you again.